Okay, here's a question for you. What if you could turn something as, well, frankly common as an unused garage, maybe one you drive past every single day, into a pretty significant source of passive income? Sounds almost too simple, doesn't it? Welcome to the deep dive. Today, our mission is really to unpack this whole idea. We're diving into the surprisingly lucrative world of garage space rentals. We want to figure out how this often overlooked asset can actually generate substantial returns for you.
And it's really timely, isn't it? I mean, if you look at the bigger economic picture right now,
Mm.
urban living costs are just soaring. Real estate markets are, well, tight to say the
Yeah,
least.
very tight.
So finding these sort of creative ways to make your existing assets work harder, it's not just smart anymore. It's becoming almost essential for a lot of people.
Exactly. And, to really bring this home, let's talk about a real world example. There's a property investor in the UK, Barry Taub.
Ah, yes, I know the story. It's quite something.
It really is. He's reportedly pulling in around £20,000 every single month.
Wow.
And how? By renting out about 150 garages and, get this, 300 parking spaces. Methodically. What's really interesting is his pricing strategy. He's getting between, say, £50 and £150 for the garages, maybe £30 to £60 for the parking spots.
And he's clever about it too, right?
Yeah.
Doesn't he also tap into event parking? Short-term stuff.
He does. Near stadiums or venues, bumping up prices for events. It's a really sharp way to maximize that revenue stream.
It just highlights the sheer scale of this opportunity, doesn't it?
Mhm.
I mean, think about it. Millions of people own garages they just don't use. Or they're full of junk.
Forgotten junk, usually.
Exactly. In the UK alone, the estimate is something like 11 million vacant garages.
11 million.
Yeah. And then you combine that with this, like, constant desperate need for parking, especially in cities near train stations.
Oh, absolutely. Nightmare zone.
You suddenly see this huge unmet demand just sitting there.
Okay, so the opportunity is massive. We get that. But let's break down why this specific model, garage rentals, is so potent as an income generator. There seem to be a few core advantages that really make it compelling. Maybe start with the cost to even get in.
Right, the barrier to entry, that's a huge one. Unlike buying a house or a flat, which, costs hundreds of thousands.
Minimum, usually.
Yeah. Garages, you can often pick them up for a fraction of that. We're talking maybe 10,000 to 30,000 pounds each, typically.
Yeah.
That just makes it so much more accessible for people starting out or wanting to build a portfolio without massive capital.
And the returns. That's the bit that seems almost counterintuitive. These small, sometimes grubby little spaces generating yields that are, what, double traditional rentals?
Often, yeah, you're looking at yields potentially around 10% annually. Compare that to your typical residential property, maybe 4%, 5% if you're lucky.
So why? What drives that difference?
Well, it's tapping into that high demand we talked about, simple, secure storage or parking, but with relatively low overheads compared to a house. And think about the upkeep.
Yeah.
Less hassle.
Massively less hassle. Imagine. No calls about broken boilers at 3 a.m. No neighbor disputes over noise. No complex eviction processes usually.
Okay, that sounds appealing.
With garages, your main worries are often just, is the door secure? Or the gutters clear? Plus, generally, you sidestep a lot of the really stringent residential regulations. It frees up your time, cuts your costs.
And that lack of hassle, that simplicity, presumably makes it easier to scale up. It's not just one garage, it could be 10 or 50.
Exactly. That's where the potential really explodes. You're not just creating one income stream. You're building a potentially quite large portfolio. But, okay, for someone listening who's thinking, right, I'm interested, where do they actually start? How do you put this into action?
Good question. First steps.
Research. Rigorous local market research. You're basically hunting for what some investors call gold mines.
Gold mines, meaning areas where demand just massively outstrips supply. Think really narrow streets with zero parking.
Yeah.
University areas, absolutely packed with students needing somewhere for their cars. Or even just storage over the summer.
Right, or near train stations.
Train stations, definitely. And those event spaces we mentioned, stadiums, festival grounds, anywhere parking or storage is a real pain point. Those are your prime targets.
Okay, so you've identified a potential gold mine area. How do you actually find the garages? Are they just listed online?
Some are, but the real pros often dig deeper. You want to look beyond just Rightmove or Zillow or whatever the local equivalent is. Check out property auctions, especially those focusing on land or other lots, not just houses.
Auctions. Okay. What else?
Keep an eye on repossessions, maybe even probate sales.
Yeah.
And don't underestimate direct outreach, identifying potential garages in your target area and simply contacting the owners. Sometimes people haven't even considered renting it out.
Interesting. So a bit of detective work involved.
Definitely. It can yield properties at a much better price than just waiting for them to hit the open market.
Right. Now, you've found one, you've maybe bought it. Pricing. How do you get that right? Barry Taub had his strategy, but how does someone new figure it out?
Market research again, but this time on pricing. Check what similar spaces are going for on platforms like uh, Facebook Marketplace, Gumtree, maybe specialist ones like Stash B if they operate in your area.
You see the going rate.
See the baseline, yes. But then think smarter. Is it peak demand time, like near that stadium on match day? Can you adjust dynamically? What's the value you're offering? Is it super secure? Does it have power? Could you charge a premium for that?
So it's not just a flat rate.
Okay.
And managing it all. Bookings, payments. Sounds like it could get complicated if you have a few.
It can, but simple is usually best. Use a clear, straightforward rental agreement. Nothing too complex. Always, always take a security deposit up front. That covers potential issues.
Makes sense.
And the key thing for smooth operation, automate payments. Set up monthly direct debits or standing orders. It just minimizes your admin, keeps the cash flow predictable, less chasing people.
Right. And once that cash starts flowing in, the obvious next step is more garages.
That's the straightforward way to scale, definitely. Reinvest profits, acquire more units in good locations, but also think vertically.
Vertically, meaning?
Could you add value within the garages you already have? Maybe offer dedicated sectioned-off storage units inside a larger garage? Or, and this is a growing area, what about adding EV charging points?
Ah, interesting. For electric vehicle owner.
Exactly. That's a service people will pay a premium for, especially in urban areas where home charging isn't always easy. Adds another revenue layer.
Okay, this all sounds very positive, but like any investment, there must be downsides, right? Risks, challenges. What should people be wary of?
Absolutely. Regulatory hurdles are a big one to watch out for. You can't just assume you can rent out any garage for any purpose.
It's like zoning.
Zoning, yes. Or maybe needing change of use permission if you're significantly altering what it's used for, perhaps turning a block of them into dedicated storage units rather than just parking. You have to check with your local council or planning authority early on.
Right, do that homework first. What about tenant issues? You said less hassle, but surely problems can still arise.
They can, though, generally rarer. The key is good screening up front, especially if someone's using it for personal storage rather than just parking a car. You want to have a reasonable idea of who they are, what they're storing, make sure it's legal and complies with your agreement. No hazardous materials, that kind of thing.
Standard landlord stuff, basically. Just maybe less frequent. What about getting the money to buy these in the first place? Financing.
Yeah, it can be trickier than a standard residential mortgage. Lenders sometimes view these non-residential assets, especially individual lock-up garages, as a bit more niche, maybe higher risk.
So harder to get a loan?
Potentially. You might need a larger deposit, or the loan terms might be shorter, or interest rates slightly higher. It really pays to speak to brokers or lenders who specialize in commercial or semi-commercial property early in your process. Understand their criteria before you get too far down the road.
Good tip. Anything else? Maintenance?
Well, yeah, even though it's low, it's not zero. You do need to budget for basic upkeep. Making sure the lighting works, if there is any. Keeping gutters clear so the roof doesn't leak. Patching cracks. And definitely getting the right insurance.
Insurance, right. For the structure itself. Liability.
Both, ideally. Property insurance to cover damage, and liability in case someone injures themselves on your property. Not huge costs usually, but necessary. Don't skip it.
So we've covered a lot, the opportunity, the how-to, the risks, and you mentioned Barry Taub in the UK, but this isn't just a UK phenomenon, is it?
Not at all. The fundamentals, lack of parking, need for storage, relatively low cost of garages. That's pretty universal in many developed and developing urban areas globally. The model is definitely repeatable.
And particularly relevant now, you think?
I do. With inflation, rising living costs, tight housing, this offers a relatively low barrier way for you, the investor, to generate income. And at the same time, you're providing a genuinely needed service for drivers or people needing storage. It solves a real problem.
It really does bring us back to that core idea, doesn't it? How something so mundane, so everyday, like an empty garage, can actually be a powerful engine for passive income if you approach it smartly.
Exactly. And if we connect that to the bigger picture, this whole deep dive, it really just underscores the potential to find significant value, real opportunity in places you might not expect, especially when the economic climate is, let's say, dynamic.
Or challenging.
Or challenging, yes. This model isn't just theoretical. It offers a practical income stream for you, but also a vital solution for other people struggling with those everyday problems of parking or storage space.
So thinking about those millions of unused spaces we mentioned earlier, not just garages maybe, but other overlooked spots, it leaves a final thought for you, our listener, doesn't it?
hmm
Given that need, given those spaces, what overlooked assets might you have access to, or could you find that could be transformed, turned into something valuable, not just for your own income, but maybe for your wider community too, something to think about?